Welcome to Blockchain Tech and Finance with me, your host. If you're on the YouTube side, please do subscribe, turn on bell notifications right here to Blockchain Tech and Finance, and chat with me. Let me know what's important that you find out in the news or cryptocurrency, NFTs, metaverse, technology, or finance. And otherwise, let's go right on into the stream for the day, starting with the market datas. All these article links also are on the, all right, monitor's working great, are on the, why is that not? Okay. Again, all these article links are on the description side of the video, so you can find them there. And I'll make sure to have the screen popping up a little more savvy next time. And prepped and ready, blah, 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 blah. All right, cool. That works. Great, awesome. Let's go right on to it with the market data. So we have the US market data. Dow Jones Industrial Average is down 0.34%. The NASDAQ Composite Index is down 0.19%. S&P 500 is down 0.25%. The Global Dow Real-Time USD is up 0.09%. Gold Continuous Contract is up 0.26%. Crude Oil Futures is up 2.2%. On the Europe markets, FTSE 100 Index is up 0.62%. The DAX is up 0.52%. The CAC 40 Index is up 0.95%. FTSE MIB Index is up 0.6%. IBEX 35 is up 1.09%. The stocks Europe 600 is up 0.72%. In the Asia markets, we have the Asia Dow Index in USD up 0.4%. The Nikkei 225 Index up 1.49%. The Hang Seng Index is down 0.33%. Shanghai Composite Index is up 0.03%. S&P BSE Sensex is down 0.22%. And FTSE Straits is up 0.18%. S&P ASX 200 benchmark is up 0.28%. And the Kospi Index is up 0.23%. In currencies, we have the Euro up 0.05%. Japanese Yen up down 0.03%. The British Pound is up 0.02%. Australia Dollar is up 0.34%. US Dollar Index is down 0.09%. And the WSJ Dollar Index is down 0.09%, respectively. In cryptocurrency, we have Bitcoin, $37,400, $408 per BTC. So congratulations on anyone trading Bitcoin as of today, up 5.09%. Ethereum also above 2,000 now, $2,042.49 per ETH, up 0.817%. XRP up 0.33%. Bitcoin Cash up 3.23%. Litecoin up 2.76%, and Monero up 2.84%. So congratulations on crypto traders if you're making profits. Gold nose ring about to fall out. All right. US and the rates, we have US 10-year Treasury note up 0.043%. Government 10-year government Germany 10-year government bond is up 0.041. Italy 10-year government bond is up 0.042. Spain 10-year government bond up 0.022%. UK 10-year gilt up 0.046, and Japan 10-year government bond is down 0.007. In the futures markets, we have crude oil again up 2.15%. Gold continuous contract up 0.32%. E-mini Nasdaq 100 index continuous contract is down 0.2%. E-mini Dow continuous contract is down 0.34%. E-mini S&P 500 future continuous contract is down 0.29%, and the silver continuous contract is up 1.15%. In the news today, once more, I have all these article links in the description on the YouTube side. You can find them in the description. Read through at your own due diligence and research. First piece is Scale or Die, an investor's guide to blockchain, Web3, and AI. This is from writer-reporter Calvin Ari Group, the business journals for Washington Business Journal. Blockchain analytics from firm Messari recently reported that venture capital funding for blockchain startups hit a 3-year low in September 2023. This isn't necessarily a bad thing. On the contrary, it suggests that the speculative casino VC cycle may finally be coming to an end. We can finally focus on the actual value of blockchain and Web3. There are 2 reasons for this. First, the public has been burned so often that investors are less susceptible to number go-up pitches. Second, regulators are stepping up to protect retail investors from predatory hucksters. The U.S. Securities and Exchange Commission, SEC in particular, is finally beginning to exercise its authority. The SEC has targeted digital assets exchanges, lending platforms, and other duplicitous, I don't know what the duplicitous actors for failing to register tokens as securities before offering them to the public. At the heart of this regulatory pushback is the debate over whether tokens are securities or commodities. Understandably, regulatory uncertainty of this type keeps many investors on the sidelines. Earlier this year, my VC arm, IR Ventures, was considering a significant investment in technology firm nChain, in one of the largest enterprise blockchain IP investments to date. Before committing to that deal, I sought a legal review to unmuddy the waters. This review, conducted by the Buffon legal group, echoed the popular perception that Bitcoin is not a security as defined by the Howey test. Now, I was an early Bitcoin adopter and vividly recall my initial excitement reading Satoshi Nakamoto's white paper, but Satoshi's vision of a peer-to-peer electronic cash system was never given a chance thanks to developers who restricted the technology to simply processing a trickle of financial transactions. This unwillingness to scale to broader utility is what makes BTC tilt closer to meeting the Howey test definition of a security, keeping it and countless other blockchains on the financial fringes. But the impact of these artificial constraints goes well beyond finance. You might have noticed that VCs who spent the past couple of years seemingly unable to get through a sentence without saying Web3 now seem to have forgotten the word entirely, or at least hope everyone else has. The missing Web3 at this point would be like abandoning the concept of electronic vehicles because you tried jumpstarting one with a 4-pack of Energizer AA's and the car didn't do so much as budge. It's not that Web3 is a bad idea. Far from it. Unpending the centralization Web2 model and restoring users' control over their personal data is both highly desirable and long overdue. It's just that most Web3 projects to date were built on blockchains that couldn't handle the vast volumes of data that such undertakings require. The concepts are fine, it's the foundation that's lacking. And the VC's firm's side, we're all in on Web3 since pivoted to AI-focused investments. Here too, a scalable blockchain has a role to play. We've all read reports of large language models scraping data from questionable sources and spitting out variations of demonstrably false information or security risks. An LLM based on authentic data can be traced back to publicly verifiable sources immutably recorded on the blockchain, would have a competitive edge over its rivals. It's no secret that this person believes that the BSV blockchain is the only chain currently capable of... Okay, what does it say? Needs of enterprises and governments. Doesn't hurt that legal opinion. All right, let me read through this. I don't really want to take opinion sides on articles here, but I want to get kind of subjective facts of things. Regardless, no smart investor put all their eggs in one basket. I think enterprise blockchain technology will play a pivotal role in dragging other emerging technologies across the finish line. If I thought differently, I wouldn't have put my money where my mouth is. But don't take my word for it. Investors should look before they leap. True. Look for projects offering solutions to real-world problems. Also, I say look for problems, look for startups and scalings and entities that are actually solving problems on blockchain layers and in blockchain that to help the blockchain itself, like Bitcoin itself and stuff. Ignore projects offering vague promises of future riches based on unclear mechanisms. Yep. And take a long-term view and don't get fooled. Yeah, that's what I always say. Take a long-term view. Everyone's like so jumping around from this crypto to that crypto to this NFT to that NFT. And just for a flip, and I get there's day traders in stocks, there's day traders in NFTs, and there's day traders in cryptocurrency. There's futures traders, blah, 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 blah. But the way I look at it is, long-term views, sort of like, set it, forget it type stocks and technology companies. Not like forget it, but, for the future growth, long-term holdings is where I'm at. That's just myself, though. All right, next article here, we have CoinDesk. Bring this article right up. And once more, go ahead and throw in your positions in the chats. Let me know what kind of article news you're reading. If there's something important I'm not covering, you want me to cover it or talk about it, let me know in the chat. Pop out of the woodworks and say something. From CoinDesk, Elizabeth Napolitano, writer reporter for CoinDesk on the policy sector. U.S. bill proposes outlawing government use of China-made blockchains and tethers USDT. The government officials would no longer be able to use networks developed by China that power crypto transactions, according to a new bipartisan bill. U.S. lawmakers introduced a bill On Wednesday, barring federal government aid officials from doing business with China-based blockchain firms, marking Washington's latest show of suspicion towards Chinese ties in the cryptocurrency industry, according to a statement from the sponsors. The bill also explicitly blocks U.S. government officials from transacting with Finex, the parent company of Tether, the issuer of the world's largest stablecoin USDT. The Creating Legal Accountability for Rogue Invaders in Technology Clarity Act, co-led by U.S. Representative Zach Nunn, Representative of Iowa, and Abigail Spanberger, Democrat of Virginia, would outlaw government officials from transacting with Chinese crypto companies, in addition to cutting off government employees' use of China-based blockchains or the networks that undergird crypto trading platforms. Neither of the bill's authors is among U.S. House Representatives leaders or holds prominent positions on committees. Other more senior lawmakers are already pressing a number of crypto bills, some of which also deal with security issues. A few of the efforts have the approval of full House committees and are further along in the process, so it's unlikely a new measure will jump in front of them in line. The aim of this latest legislation is to ensure the nation's foreign adversaries do not have a backdoor to access critical national security intelligence and Americans' private information, the lawmakers said in a statement. Within the next decade, every American will have sensitive private data stored using blockchain technology, so China's heavy investment in this infrastructure poses a colossal national security and data privacy problem. Nunn, a freshman member who joined the House this year, said on Wednesday. The bill also bans officials from transacting with the Spartan Network, the Conflux Network, and Red Date Technology Co., the architect behind China's national blockchain project and its central bank digital currency, CBDC, or digital yuan. Red Date responded to the bill, adding that the BSN Spartan Network was for traditional IT, not crypto. The firm also welcomed U.S. agencies to pursue their source code for anything further. To say anything about USDT in here? I was wondering about what their take on the USDT part was, but yeah. BSN Spartan Network is completely open source and we welcome agencies from the US or any government to review the source code and make their own conclusions about the technology. The Singapore-based BSN Foundation, which with members from the USA, Europe, and Asia, governs the Spartan Network, which is completely separate from the BSN network in mainland China, the firm said in a statement. The legislation also directs the U.S. Secretary of the Treasury, Secretary of the State, and the Director of National Intelligence to develop a plan to prevent the risks posed by China's and other foreign adversaries' development of blockchain technologies. The proposed restrictions come after lawmakers this summer instituted a security-driven ban on government employees' use of TikTok, a popular social media app with Chinese roots. The push came after a former employer of TikTok parent company ByteDance alleged, we kind of already know this, their court filings and all this stuff, and the Chinese Communist Party, utilizing a secret backdoor in its popular social media platform to monitor Hong Kong-based activist locations and messages in 2018. So yeah, that's that right there for CoinDesk, and a freshman type bill, or freshman representative members type U.S. bill proposing outlawing government use of China-made blockchains and Tether's USDT. Or they use USDC from Coinbase. Even then, that wouldn't stop much for people transacting USDT and the decentralized networks. Another article from CoinDesk here from Andy. Writer Andy Bear. An opinion: why Ether staking rate will increase crypto adoption. Ethereum's integrated staking rate is now part of the investment case of Ether. Understanding and measuring it is key to driving innovation and acceptance of the ETH-based financial products. Ethereum's conversion to proof of stake not only created the foundation for the liquid staking ecosystem, it delivered a native crypto rate to finance that we can serve as a critical piece of market structure. Pause that article there. Ethereum transactions has immediately applicability in DeFi, centralized digital asset finance, and traditional finance. This has fueled market demand for an Ether staking rate for benchmarking, research, and risk transfer. In benchmarking, mass adoption and integration of digital assets and investment portfolios is critically important to the future of the digital assets industry. While many investors will make their first allocation in Bitcoin, the investment case for Ethereum is likely to attract interest as the next step. Not only does ETH have history and scale, it now has an integrated yield. As staking becomes better understood, investors will demand that yield rate be more predictable. Moreover, they will pit providers, LST funds, ETPs, KEXs, future contracts against each other to hunt for the best return. Benchmarking these returns provide a yardstick for investors and allow providers to show the alpha they were able to deliver. So yeah, research these LST funds, ETPs, KEXs, centralized exchanges, futures contracts, and all the like. Research. What is ETH staking rate exactly? It is a floating rate comprising of two parts: rewards for consensus layer duties and priority transaction fees. The former is determined by Ethereum's simple monetary policy, which adjusts rewards based on the aggregate amount of ETH that is staked, a single objective security-based policy. The latter is determined by demand for the Ethereum network, which tends to rise when new information or opportunities enter the system. From my understanding, I think the staking on the proof of stake migration was 40 ETH. Don't quote me on that. Whether it's changed, I'm not really sure. How does this compare to rates in traditional finance? Consensus rewards are paid to help secure, but not finance the network. They are determined by a stated policy like a central bank rate, but not subjected to political influence or economic interpretation. They are crystal clear and reasonably predictable. Priority transaction fees, those paid to validators, so the people who are validating the ETH network block by block with their staked Ethereum, after base fees are burned, are less predictable and subject to spikes when network demand rises. This demand spread widens when demand for Ethereum causes users to pay extra gas. So I was about to say, yeah, the gas fees are going to go up to get transactions on the blockchain. So if you want to mint a new piece of artwork, if you want to transact with a smart contract, gas fees are going to be higher, or trade cryptocurrency, blah, 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 in network congestion periods. Should we, and if so, how, compare this rate to US Treasuries or SOFR? I mean, sure, why not? They are clearly, that's just my words about it. They're clearly not direct analogs. Even the different profiles of their funding bases. Yeah. However, there are similar opportunity cost dynamics. For instance, we've seen a shrinking of the validator queue as staking rate has declined relative to available fiat rates. Should demand for the rate be adjusted by Ether's forward-looking inflation/deflation status? Should it be implied in Ether futures contract or OTC forward market? I mean, the thing I've been hearing is capping Ethereum on a fixed supply, but that's who knows about that. That would be bullish on a lot of people, capping supply, because Ethereum currently is infinite supply. Go back up here to the risk transfer. Ethereum validator stake 32 ETH. Okay, 32. I thought it was 40, but anyways, over here, the calculation of a standardized and independently calculated rate, along with access to its components, can provide analysts with information to help understand Ethereum better, both internally and in comparison to other money markets. Note, CESR, the composite Ether staking rate, which is administered by CoinFund and calculated and published by CoinDesk Indices, does just that. And the risk transfer, yeah, Ethereum validators stake 32 ETH and get a variable stream of rewards. Future rewards can be hard to predict. This yield volatility is not optimal when evaluating a validator's financial performance with measures like its Sharpe ratio. What if the validator could swap its future staking yield for a fixed rate, and what rate would it accept to enter that transaction? This is the genesis of a fixed versus floating swap market and the birth of a forward curve for the ETH staking rate. Speculators may also want to gain exposure to the future rate, expressing views on network demand, volatility, or macro events. OTC dealers and DeFi protocols can create such marketplaces whose contracts must settle into an independent, calculated, well understood value. I mean, yesterday I read about like Warren Buffett's position with a company that is doing centralized exchanging of Bitcoin and Ethereum. So he's got stake holdings in this company that's doing services like that. And maybe this company is already staking their Ethereum via different validator positions in the ETH network, accruing all those new ETH rewards and just retailing it out to the marketplaces. That would make a sense of why someone like Buffett would enter this sort of industry because of these, those certain rates market that are on these validators. But yeah, OTC dealers and DeFi protocols can create such marketplaces right there. Whose contracts must settle into an independent, calculated, well understood value. This embryonic but scalable market is an important addition to the idea set for crypto derivatives markets because it goes beyond serving investors and lenders and addresses a new use case: corporate finance. Right there. Keyword: corporate finance. In conclusion, expanding the users and use cases of Ethereum staking rate will help improve network security, invite new investment interest in Ether, and create new bridges from digital assets to traditional finance. This fueled the inspiration to create CESR, the composite Ether staking rate. CESR and other Ethereum-focused LST-Fi protocols can be found in the newly launched report, the Ultimate Q4 2023 Market Overview. So this is edited by Ben Schiller as well. Schiller. Shilling out those edits. So that's that. Why an Ether staking rate will increase crypto adoption. Let me know your thoughts and comments on that. If you got insights. If you have insight. On the next article we have here, it's a little out of blockchain back into cryptocurrency, and then we'll go into some NFT, metaverse technology, and general finance news before closing out the stream. In the crypto markets, we have FTT token jumps 90% on Gensler's comments. So just because all this collapse of FTX and all the token FTT does not mean that the FTT token is not still trading, right? And it's autonomous basically at this point for who's trading, who's holding it, and whatever they're doing with it. I don't even know what blockchain it's on, to be honest. I never even researched it. Probably Ethereum or something. Do it within the law, Gensler said in relation to reports of buyers emerging for the failed crypto exchange. But this is by Oliver Knight, a writer reporter for CoinDesk and the markets. FTT, the native token of defunct cryptocurrency exchange FTX, has surged by 90% following comments from U.S. Securities and Exchange Commission SEC Gary Gensler, the chairman, who warned that if anybody wants to get involved in crypto, they must do it within the law, following a series of bids to reboot FTX. In a response to questioning over whether Tom Farley, former president of the New York Stock Exchange, was looking to buy FTX, Gensler said, if Tom or anybody else wanted to be in this field, I would say do it within the law. Build the trust of investors. I don't want to pause that. Build the trust of investors in what you are doing to ensure what happened there. What you are doing to ensure that you're doing the proper disclosures, and also that you're not commingling in these functions, trading against your customers, Gensler continued, or using their crypto assets for your own purposes. There are reportedly several groups in the running to take over FTX following last week's trial that saw the company's founder, Sam Bankman-Fried, receive a guilty verdict on several criminal charges. The speculative rally indicates hope for further upside if FTX 2.0 gets the green light, although there is no certainty that a native token would even be used in a restarted exchange. FTT is currently trading at a 7-month high of $2.30 per FTT, with trading volume over the past 24 hours exceeding $300 million, according to CoinMarketCap. In spite of optimism around a potential relaunch, a number of institutional traders expressed their concerns with the platform earlier this year, citing poor latency and tons of issues. So yeah, I mean, obviously, whatever tech issues are in that platform, that exchange, would need to be sorted out, cleaned up. And what's the risk factor? Someone buying like something like that outright to launch it or do something with it, compared to just starting their own. Let me know your thoughts on this in the comments in the chat. This is Magazine by Cointelegraph. Train AI models to sell as NFTs. LLMs are large lying machines. AI. Training AI models for a battle royale. GPT-4 gets a racing stripe, deepfakes, and the war. This is from Andrew Fenton, writer reporter for the Magazine by Cointelegraph. In the AI arena, so we're going into some NFT news here. Non-fungible token news. AI chatted with Frameworks Ventures' Vance Spencer recently, and he raved about the possibilities offered by an upcoming game his fund invested in called AI Arena, in which players train AI models how to battle each other in the arena. Okay. Framework Ventures was an early investor in Chainlink and Synthetics, and 3 years ahead of NBA Top Shots with a similar MFL platform. So when they get excited about the future prospects, it's worth looking into. Also backed by Paradigm, AI Arena is like a cross between Super Smash Bros. And Axie Infinity. The AI models are tokenized as NFTs, meaning players can train them up and flip them for profit or rent them to noobs. While this is a gamified version, there are endless possibilities involved with crowdsourcing user-trained models for specific purposes and then selling them as tokens in a blockchain-based marketplace. Probably some of the most valuable assets on-chain will be tokenized AI models. That's my theory, at least, Spencer predicts. And AI Chief Operating Officer Wei Zi explains that his co-founders, Brandon Da Silva and Dylan Pereira had been toying with creating games for years, and when NFTs and later AI came out, Da Silva had the brain wave to put all three elements together. Part of the idea was, well, if we can tokenize an AI model, we can actually build a game around AI, says Z, who worked alongside Da Silva and TradeFi. The core loop of the game actually helps reveal the process of AI research. There are three elements to training the model in AI arena. The first is demonstrating what needs to be done, like a parent showing a kid how to kick a ball. The second element is calibrating and providing context for the model, telling it when to pass and when to shoot for goal. The final element is seeing how the AI plays and diagnosing where the model needs improvement. And quote, so the overall game loop is like iterating through those three steps, and you're kind of progressively refining your AI to become more and more well-balanced and well-rounded fighter. The game uses a custom-built feed forward neural network, and AIs are constrained and lightweight, meaning the winner won't just be whoever is able to throw the most computing resources at the model. We want to see ingenuity creating to be the discerning factor, he says. Currently in closed beta testing, AI Arena is targeting the first quarter of next year for a mainnet launch on Ethereum scaling solution Arbitrum. There are two versions of the game. One is a browser-based game that anyone can log into with Google or Twitter account and start playing for fun, while the other is blockchain-based for competitive players, the esports version of the game. This being crypto, there is a token, of course, which will be distributed to players who compete in the launch tournament and later be used to pay entry fees for subsequent competitions. Z and Vision, I don't know if I'm pronouncing their name correctly, but I think ZA. Envious Sages, I don't know what that is. Big future for the tech, says it can be used in a first-person shooter game and a soccer game and expanded into a crowdsourced marketplace for AI models that are trained for specific business tasks. What somebody has to do is frame it into a problem, and then we allow the best minds in the AI space to compete on it. It's just a better model. I don't know. We can watch this teaser trailer there. Why not? I'm going to say this right away. This is already looking like it's ripping off a game that I see on Xbox. I've seen on Xbox. I can't. It's got like Marvel characters and like, you know, like Finn and Jake and different like, I don't know, like Scooby-Doo characters. I can't think of the name of it, but it's looking no different than that right now. So I will say it looks like it's ripping another game off that's been playing for a while, but with AI. Let's keep playing. I'd say that much. Okay, yeah. Well, it could have been the same game makers. It could be the same like entity or studio. Who knows? So maybe it's not ripping it off, but it's just porting something over. Who's to say? Otherwise, or it's just ripping off a design of a protocol of a game. Because if you play this other game, it's like exactly like what I just saw there, except you're actually playing it yourself. But I get it. You can have AI models trained for this. Chatbots can't be trusted. A new analysis from AI startup Vectara shows that the output from large language models like ChatGPT or Claude simply can't be relied on for accuracy. Everyone knows that already. Yep, obviously, it turns out that GPT-4 is the most accurate, inventing fake information around just 3% of the time. Meta's Llama models make up nonsense 5% of the time, while Anthropic's Claude 2 system produce 8% of bull crap. Google's Palm hallucinated an astonishing 27% of its answers. Yeah, so I mean, like, what does that have to do with anything in this game? Yeah, Xfield's on. Are we in the same article even, or was just like article done? No, it's still going on about AI models. This is all stuff we've heard. Obviously, if you've heard this, recently, the Grok AI model from X and Elon Musk. Yeah, I think that's about it. I don't know. We'll have to see. Again, like, obviously it's at a beta, so that's not like anything conclusive of like a final product. Obviously, maybe it could be completely and vastly different. But who's gonna play in esports like AI based training models compared to wanting to play, among themselves? There are passive, idle games where people are playing. So this kind of seems like an AI model passively playing in an esports royale setting. So it's interesting. I will say that much. Not sold that it looks exactly like another game I've seen that people actually play themselves. But who knows? What do I know? Let's go on to the next article here. In NFT news, Times Union. Can art thrive on an NFT world? Rockwell Museum thinks so. This is from Catherine Kiesling, writer-reporter for Times Union. Norman Rockwell's art has seemingly been everywhere. It's adorned the Saturday Evening Post and Boys Life covers. His illustrations were splashed across ads for Coca-Cola and inside beloved children's books. His art hangs on a number of prestigious museums and was even displayed in the White House during Barack Obama's presidency to celebrate Ruby Bridges, and now Rockwell's work is entering a new frontier, non-fungible tokens, or NFTs. The Norman Rockwell Museum in Stockbridge, Mass., in partnership with Iconic, an art platform and agency focused on bringing digital innovation to cultural institutions, is launching a series of NFTs from an extensive archive of Rockwell's work with a focus on his creative process. The museum is among a slowly growing trend of art institutions embracing the financial and artistic realms of digital collecting, potentially opening new avenues of financial stability for museums and expanding the idea of art and its value in digital age. I'm very interested in opening like a art gallery that's NFT based, real based, and NFT based through Blue Chip Club. Studio sessions. The Norman Rockwell collection pulls from more than 18,000 processes works, including color studies, model sessions, thumbnail sketches, and complete drawings. Each NFT set billed as a session by Iconic in the museum will include a selection of these studios themed around one of Rockwell's paintings. What we're super excited about is to be able to share Norman Rockwell's creativity that is represented in our archival collection, which has not been seen to the degree of the art collection, which hangs on our wall, goes on exhibition, and is typically more published in books. It's more accessible, said museum CEO and director Lori Norton Moffat. The first session features 8 processes works from Rockwell's self-reflective work, Waiting for the Art Editor, created circa 1970. Among works selected for the inaugural NFT drop are 1 color and 1 charcoal study, a set of photographs from model sessions, 2 portraits of Rockwell's modeling character expressions, and 1 contact sheet that features portraits of the artist working on the painting in his studio. Each work will be available to purchase with a credit card or Ethereum, a form of cryptocurrency, and are available for pre-order through Iconic's website. Prices range from $350 to $2,400, and some works have multiple NFTs available. Interested buyers can sign up for updates online. Collectors will receive a museum-quality print of the NFT, which Iconic CEO Chris Cummings describes as 1 purchase in 2 mediums instead of an either or question of prints versus digital. It is powerful co-equal pairing, Cummings said. We believe that this pairing of print and digital editions will appeal to a wide range of potential collectors. So I guess can go about NFTs. So what makes an NFT more special than saving the digital image of these works from Iconic's website? Or the online version of this article for a collector, it lies in the blockchain, a digital ledger built from a unique series of codes. The blockchain records the NFT's ownership and provenance. Cummings said, lending authenticity to the NFT, in this case, certifying that it comes from Rockwell's archive at the museum. As for the confusion around the emerging technology, Cummings equates NFTs to 2 other acronyms, DVDs, VCRs. Like DVD and VCR, NFT refers to a technology that carries information. Real estate can even be conducted through NFTs. Cummings said, in this instance, the information is art, and the technology gives the museums a better way to track the art and its provenance while expanding its audience. People around the world see Norman Rockwell, know his name, but how many people ever get a chance to come into the Norman Rockwell Museum in person? In comparison, how many people know about Rockwell? Cummings said. So this can bring it to a global audience, basically, is what that's saying. NFTs, Norman Rockwell Museum. Studio session, Morton Moffat said is a continuation of the museum's digitization efforts that began 20 years ago with Project Norman, a 10-year effort to preserve and catalog the museum's collection and make it publicly accessible online. The effort continued in 2014 with the digitization of about 50,000 black and white photographs from Rockwell's archive. The museum has been researching NFTs for several years, though it was waiting for the right partner and time. Morton Moffat said, "Iconic, with its focus on working with museums to create curated marketplace NFT art, was the ideal collaborator, and with the museum stabilized after the COVID-19 pandemic, now was a good time to launch. Plus, the Rockwell family expressed a shared interest in exploring the digital realm further. We were having one of our meetings a couple of years ago, and we each brought that topic up to each other." Morton Moffat said, "So clearly we had been looking at the new audience and art and knew our opportunity together. The museum's portion of the proceeds will directly support collections, care, public access, and further the scholarship and study illustration. Because the sale revolves around digital assets and high quality reprints, the museum's physical archive remains untouched, meaning no works are deaccessioned or removed from the collection in order to sell, which caused controversy at the Berkshire Museum when it announced the sale of 40 pieces in its collection to fund building upgrades in 2017. We actively seek out and welcome ways to diversify our revenue through new projects and new funding sources that align with our mission, as this collaboration does," Moffat said. "As far as the market's concerned, the museum isn't worried," Moffat said, noting all markets, including the art market, tend to fluctuate, and while the NFT explosion a couple years ago, which included the $69 million sale of an NFT by artist Beeple at Christie's, created an inorganic growth, the market is steady, Cummings said. If you look at year on year, people collecting digital art, engaging with digital art, all those numbers are one of the healthiest growing sectors in the art worldwide, and it's one in which they are here to stay. NFTs in the art world. How long does this article go on for? We get it. I mean, get what it's saying here. They're going to launch Norman Rockwell's art to their museum as NFTs. What sets the Norman Rockwell Museum apart from its peers, though, is its focus on Rockwell's process works, not his famous completed illustrations, said Heather Nolan, founder and creative director of Nolan Consulting, a firm focusing on advancing in creativity, innovation, and thoughtful leadership in the nonprofit arts and humanities sector. I applaud that they're taking a novel approach because I have not heard of any museums or collection-focused institutions like libraries and archives taking this approach to NFTs, Nolan said. It's not just taking a beloved picture, for instance, like Van Gogh. Van Gogh's The Night Cafe and producing an NFT. As an iconic team began reviewing the Norman Rockwell Museum's archives, the creative process documentation leapt out, Cummings said. Yeah, because he's got a lot of artworks out there, so let's bring some forth, I guess they're saying. In these works, you could feel his passion, his sense of humor, his thoughtful and sometimes complicated relationship with the subject matter, and how hard he worked to perfect the slightest expression, he said. Yeah, I'll say that much in his artworks. Yeah, it's an opportunity to connect the world with a new aspect of our museum collections that people love but rarely have a chance to see. Moffat said, "People are so fascinated by Rockwell's working process, which was extremely meticulous." I have some prints of Rockwell, and yeah, they're so cool. Yeah, I don't know. That's about it. Future sessions. Yeah, I'm going to leave it at this. The limited, in conclusion, the limited digital edition collections that now people are enjoying and consuming is consistent with how illustration has always partnered with new technology to make images available to people across many platforms, with many different ways to take beautiful imagery into their lives. Norton Moffat said. So yeah, can art thrive in an NFT world? Rockwell Museum thinks so, and they're doing so. Catherine Kissling, writer reporter for Times Union. Let's keep going here to some metaverse news. The NFT news part. Gucci Cosmos Land opens in the Sandbox Metaverse game. Luxury house Gucci brings its London historical exhibit to the Metaverse with Gucci Cosmos Land in the Sandbox. Luxury fashion house Gucci has brought its archival exhibition in London to the metaverse, opening Gucci Cosmos Land in the Sandbox virtual world game. The digital experience allows visitors to explore decades of Gucci history and iconic designs through an interactive journey, the company announced Wednesday. Gucci Cosmos Land is a new way for fashion and history lovers alike to access the iconic London-based exhibition from anywhere in the world, said Sebastian Borget, COO and co-founder of the Sandbox. In the announcement, it will allow visitors to immerse themselves into Gucci's past, present, and future. Some years ago, I kind of like faded Sandbox and the Sand token, just as like why, but learn not to fade anything because this is happening. A lot of this is happening on Sandbox, and the Sand crypto like went up exponentially from when I was talking about it. But whatever. Originally envisioned by artist S. Devlin and curated with archival Gucci designs by Maria Luisa Frisa, Gucci Cosmos Land evokes the real-world Cosmos exhibition. The virtual experience spirals users through the fashion house's creative legacy across different decades and themes. The metaverse activation serves as an homage to Gucci's origins and continued innovation since being founded in 1921. Gucci founder Guccio Gucci drew inspiration working as a porter at the Savoy Hotel in London in the late 19th century before launching what would become the iconic luxury brand. Players can now navigate through sections representing Gucci's principles, inspirations, and creativity by parkouring across worlds and discovering archival designs, some not previously displayed. The Sandbox is an Ethereum-based metaverse game that allows players to purchase virtual land via NFTs and develop their own games and experiences. It's also free to play without buying tokenized items, and the game has partnered with brands and entertainers including McDonald's, Adidas, Ubisoft, Snoop Dogg, Warner Bros. New Music Group, and The Walking Dead. I guess we can play something here. Let's see it. Yeah, there's a little sneak peek. What is going on there? All right, bring that back. Video is looking. All right, scale it out. Had to readjust it. Anyways, Gucci isn't a newcomer to the metaverse. Luxury house launched its Gucci Vault experience in Sandbox. I remember that in 2022. I think I talked about it here on press news streams. And more recently, debuted its Milan Fashion Week show across metaverse platforms, including Roblox, South Korea's Zepeto, and China's QQ. All right. Oh, there you go. More exhibition space from Gucci Cosmos Land opens in the Sandbox metaverse game. It's from Decrypt AI, edited by Andrew Hayward. So AI wrote this and edited by a real person. Let's go to the BBC and technology. In tech news from the BBC, 5 hours ago, stop suggesting children as friends, social media firms told. This is from Chris Valance, technology reporter for the BBC News. Social media platforms should not fight online grooming by not suggesting children as friends by default, the communications watchdog says. The warning is contained in Ofcom's first guidance for tech platforms on complying with the Online Safety Act. This covers how they should tackle illegal content, including child abuse online. Ofcom revealed figures suggesting that over 1 in 10 11 to 18-year-olds have been sent naked or semi-naked images. This first draft code of practice published by Ofcom and its role enforcing the Online Safety Act covers activities such as child sexual abuse material, CSAM, grooming, and fraud. If it wants to hear what tech platforms think, of its plans. Much of the guidance targets grooming. The largest platforms are expected to change default settings so children aren't added to suggested friends list, something that can be exploited by groomers. They can should also ensure children's location information cannot be revealed in their profile or post and prevent them receiving messages from people not in their contacts list. Depending on their size, type, and the risk they present, platforms should also make sure moderation teams have resources they need. Make it easy for people to make a complaint to the platform, remove accounts run on or behalf of terrorist organizations, use key searches to find content linked to fraud such as stolen passwords, identify content containing to the addresses of child abuse websites. Search engines should not index websites previously identified as hosting child abuse material. Search engine users should have a way to report search suggestions they believe are pointing them to illegal content. Ofcom will also require some platforms to use technology called hash matching to detect CSAM. This converts an image into numbers called a hash and compares that with a database of numbers generated by known CSAM images. If there is a match, then it means a known CSAM image has been found. The method is already widely used by social media and search engines, according to Professor Alan Woodward of Surrey University. I fear Ofcom are simply codifying mechanisms that are already in use. It's not surprising, as research today has found nothing more effective than what is in use already, he told BBC. Private messages, but this hashing will not apply to private or encrypted messages. Ofcom stresses it is not in this guidance making any proposals that would break encryption. Powers in the bill that could, if certain conditions are met, be used to force private messaging apps such as iMessage, WhatsApp, and Signal to scan messages for CSAM have been deeply controversial. This app uses end-to-end encryption, which means even the tech firm cannot read the contents of the message. Some major apps have said they will not comply if asked to scan encrypted messages, arguing it would require them to weaken the privacy of their systems globally and weaken the security of systems that protect users, including children. Ofcom says those powers will not be consulted until 2024 and unlikely to come into force until 2025. Some questions whether it will be ever be possible to enforce these powers as a way to that preserves the privacy of encrypted communications. Asked in a BBC interview if those powers would ever be used, Ofcom's chief executive Dame Melanie Dawes said, "It's hard to say right now, but there isn't a solution yet, a technology solution that allows scanning to take place in encrypted environments without breaking the encryption." But she encouraged encrypted messaging companies to find ways to combat child abuse on their platforms. In the Great Expectations section, the challenge facing Ofcom is significant. The first guidance is over 1,500 pages long. Over 100,000 services, many based outside the UK, may be subject to regulation. The government figures have suggested that 20,000 small businesses could need to comply. Asked if Ofcom had the sources it needed, Dame Melanie admitted it was a really big job, but added we're absolutely up for the task and we're really excited that we're launching today. It faces another challenging managing expectation from the public and from campaigners. Whatever Ofcom announces, it may be criticized for being too hard on tech platforms or not hard enough, says Dame Melanie. If it is the job, it isn't the job of a regulator to be loved by everybody. That's impossible. And it's not what we ever aim for, but it is our job to be proportionate and to make sure that what we require is evidenced and has been backed up by proper facts, Dame Melanie added. And one expectation Ofcom is keen to dismiss that harmful content should be reported directly to it. Instead of its task is to make sure the tech firms have good systems for use to report illegal or harmful content to them. So this isn't like TV complaints where you can submit a complaint to Ofcom and we'll consider it as the regulator. As the regulator, Dame Melanie said. So maybe we'll see more from that. And stop suggesting children as friends, social media firms said. I guess at least like take that first step of not suggesting youth to across social media platforms to be friends with. Especially among adult type use apps. Which pretty much should be like all of them, basically. But set your parental controls and keep your children safe. Trump posts weird. So we're going to go into the finance news out of the tech sector of news. And Trump posts weird story that accuses Judge Arthur Engoron of posting bare-chested photos. So we're going to go through this and one other piece of finance news and close out the stream for the day. This is from Dave Goldliner, New York Daily News and Yahoo Finance, writer-reporter. New York, former President Donald Trump on Wednesday amplified a story that accuses the judge presiding over his $250 million civil fraud trial of posting off-color photos in his Long Island high school alumni newsletter. Hours after his daughter Ivanka testified in Judge Arthur Engoron's courtroom, Trump reposted a story from the right-wing Gateway Pundit site claiming that the judge published bare-chested photos of himself in the online newsletter. Trump posted the story with the headline, "Unhinged Judge Engoron under scrutiny" in his social media site, even though there is little sign of any controversy of the publication. Engoron, a 1967 graduate in the Wheatley School, a public school in Williston, New York, curated the newsletter, which serves fellow alumni. Engoron declined to comment on the Daily News, referring questions to a spokesperson as the New York court system. It's true that Engoron apparently posted before and after workout photos in 2020 and 2021 issues of the newsletter. That's just weird saying that. Like, how many times do people like post on Instagram like before and after workout photos where they don't have a shirt on? The story claims with no evidence that the pictures are of Engoron, although it's not clear. It could be like a deep fake, who knows these days. Although it's not clear shouldn't even be laughing about it. Like, apparently there's been problems with like these deep fake things with actors and people, whatever. Anyways, from the newsletters that they depict him, indeed, it's not clear what the photos really suggest. Engoron, who has showed a healthy sense of humor from the bench, has said Trump is free to criticize him. The former president regularly rides Engoron as unhinged, or even worse, even though the judge is empowered to deliver a verdict in the case. The judge did issue a gag order barring the former president from posting commentary about his court clerk and other staff after he accused the clerk of being biased against him because she was photographed with Senator Chuck Schumer. He later extended the order to his defense lawyers after they attacked the clerk in open court. So yeah, that's that little bizarre story right there. And let's go into this final piece of finance news for the day. Close out the stream. It's kind of basically like world news, finance news. In the Financial Times, Russia war economy leaves businesses starved of labor. And obviously it's not going to read that. Let me read that. So if you're on the Financial Times, check out that article. It's in the description box below on here. Otherwise, we're going to close it out right here. So if you're on the YouTube side, please do subscribe, turn on the bell notifications right here to Blockchain, Tech, and Finance. And I will see you all back tomorrow with another set of news articles. This one went a little bit longer, but we'll see what the news brings tomorrow, whether it's short or longer. Either way, have a great and safe day. Peace be with you. Onamashigas. Stay safe. Goodbye, goodbye.